Richmond, Virginia Governor Glenn Youngkin proposed a state budget on Wednesday that reduces income taxes but increased sales tax. Said that management has made state financing more flexible than they earned, maintenance and fund increases for payment for teachers and government employees, although wage increases are smaller than last year's. While legislative session starts on January 10, General Assembly is preparing seize control of both chambers. While priorities of Youngkin in Corridor to enter into force in Corridor High'll have work. This budget is the chance to leave a mark on Youngkin's state policy. Virginia adopts two-year spending plans that staggered around gubernatorial elections. New governor's Shepherd's ruling mansion was created by previous inhabitants of mansion, and last budget of a management will be handled by next governor. The exam budget is single governor from start to finish. Youngkin seems to have adopted a less confrontation approach than he starts to work because he thinks it was a conservative duty. In the number of signatures of tax cuts, Youngkin proposes a 12% decrease in all income tax rates. The best parentheses will decrease from 5.75% to 5.1%, a decrease in a political divided General Assembly this year. However, this time, Youngkin proposes a change that will benefit the families of low-income working families. Democrats have tried to increase this loan for a long time. According to Youngkin consultants who gave information to journalists before presentation of General Assembly on Wednesday, income tax deductions will cost state about $1.1 billion in first year and $3.4 billion in second year. However, this cost will be partially balanced with an increase of 0.9% in the state sales tax. This is currently 4.3%. Drowning tax cuts. A governor who tries to revive the conservative good intentions and national political stance. However, consultants, the united offers resulted in a net $1 billion deduction in state income to stabilize and make Virginia competitive with neighboring states. He said. A consultant, a counselor, said. The governor proposes a comprehensive tax reform, he said. Compared to rival states, Visor was less dependent on Virginia's income taxes and less dependent on sales taxes. For example, Tennessee Youngkin, often referred to as competitor state income tax. But there is no higher sales tax and an average of 9.55%. In Virginia, such as ratio increase, sales tax, flow services and digital downloads. It will be accompanied by expansion to digital areas that are currently not taxed. According to Visor, sales tax increases will increase state revenue about $1.1 billion in 2025 financially and $1.8 billion in the financial year of 2026. At least some of Youngkin's expenditure priorities are likely to receive two-party support at the General Assembly. 27,000 children who are at risk of losing service while running out of federal funds. 2Y.